What is going on, guys? Nick here, back with another video. In this video, I'm going to take a look at NIO, the hottest stock on the internet, and tell you whether or not you should buy, sell, or hold. I've looked through all the reports and the finances, and I'm going to give you my honest opinion on whether or not you should load up on shares or not. So to start this out, I'm going to do something that I never do first, and that's look at the share price. So we can see that on July 2nd, the price shot up from $8 a share all the way to $16 per share, and has since come back down to $11 as of July 17th. On July 2nd this year, the stock shot up 16% after it was announced that they had delivered 3,740 vehicles in June alone. This is a 179% increase from last June when they sold 1,500. They also saw continued consistent sales of their ES6 SUV. If we take a look at the chart, we can see these numbers are good, but comparing June last year to June this year might give you the wrong impression about how their sales are increasing. They also reported, as of June 30th, they have delivered a lifetime total of 46,000 vehicles and 14,000 vehicles in 2020 alone. Now, if you compare the amount of cars that NIO sold to other car manufacturers, you'll see that 14,000 is actually a very good number. It ranks them at 30th, just behind Porsche and just above Jaguar. One of NIO's major accomplishments is its battery swapping technology. Right now, if you're in an electric car on a long road trip, you have to plan to take a 30 to 40 minute stop just to recharge the battery. Batteries typically make it about 300 miles before they need to recharge. So if you're making very long road trips, this can definitely add a few extra hours onto your trip. NIO designed its cars to go up on a lift, the battery will come out, a new one is put in, and then the car is on its way, refueling the entire vehicle in 3 to 4 minutes versus the 45 minutes at a Tesla supercharger. Tesla had actually reported the same idea back in 2014, but had abandoned these plans. Appointments for the battery swap from Tesla cost between $60 to $80 and just weren't very popular. Elon said he didn't actually think it made any sense to swap the batteries when they could use a supercharger in 40 minutes. However, as of May 26th of 2020, NIO had reported completing its 500,000th battery swap, so clearly this technology is far more popular in China than it ever was for Tesla. I also went and read some reviews of the ES6, and it actually seems like a pretty decent car. They reported good power output and smooth handling for normal drivers. They did report some problems with the braking sometimes being too aggressive, and that the battery at one point got hot after driving it fast, but I don't think that this will be an issue for people who are driving this car as a normal vehicle. If you like this type of content where I research popular stocks and tell you about them, please take a minute to scroll down and hit the thumbs up button. It lets me know to keep making this type of content. So if we look at the stock price recently, we can see that on Monday, July 13th, the stock price hit its peak at $16 per share, but then slowly came back down to about $11 per share. The shares started to fall after Deutsche Bank talked about the positive growth of the company, but did not recommend buying it. On July 17th, the stock took another big hit after Goldman Sachs put out a sell rating on it and gave it a price target of $7. The analyst said he believes the current share price reflects over-optimism given no substantial changes to profit and volume expectations over the long term. He said that the case for investment is if the Chinese people desire premium vehicle brands, combined with being China's first homegrown high-end vehicle brand. So what we need to do is take a look at the current valuation and decide for ourselves whether or not it's below what makes sense or if it's way too high and we should stay away. But before we get into what I think this company is worth, comment below what you think it's worth and why you think that. So what we have for NIO, they're a fairly new company, so we only actually have 4 years worth of data. But in those 4 years, the first two they reported making $0 in revenue, but then in 2018 they made $5 billion, and in 2019 they ended up with $8 billion in revenue. The part that did really surprise me about their income statement was their net income. They reported an $11 billion loss in 2019. So they actually lost about $3.5 billion more than they actually took in revenue. But things got much worse when I went over to the balance sheet. As of March 31st, 2020, they reported $15 billion in assets and $23 billion in liabilities, which gives them negative $8 billion in equity. On top of their negative equity, they reported $13 billion in debt. But this actually gets even worse when we take a look at their current assets to current liabilities. Current assets are basically cash on hand, plus the income for services that they've already delivered but haven't received payments for. Current liabilities are basically payments that they're going to owe in the next year. So they reported $6 billion in current assets to $12 billion in current liabilities. So I expect in the next year that they're going to have to take on some sort of debt or additional financing to be able to cover the difference between their current assets to current liabilities. So right now, with an $11 billion loss, a negative $8 billion in equity, and $13 billion in debt, I find the $13 billion valuation to be very concerning. I don't see how it's possible for them to continue losing this much money while already being fully loaded in debt, because right now they rely on borrowing money to grow. Eventually, if people think that they're not going to get their money back, they're going to stop loaning money, and when that happens, this company will go bankrupt. They have to become profitable sometime in the near future, otherwise this will happen. So my buy, hold, or sell rating on this company right now is sell. Because of the negative earnings, I have to use a price to sales ratio to come up with the proper valuation. Right now, I would say this company is worth about half of its sales, which puts the valuation at about $3 to $4 billion. This translates to a share price of about $2 to $3 per share. If you own stock in NIO, I would highly recommend selling it right now. I see a lot of downside potential, and I really don't see any upside at this point. While this company is doing very well with its vehicle deliveries and its revolutionary battery swapping technology, it could be a very long time before they're profitable. And it's very possible that their balance sheet ends up taking them down long before they ever become profitable. Losing more money than you actually take in revenue while being upside down on your balance sheet is a really bad position to be in. $13 billion is a lot to pay for a company that's losing $11 billion per year and only taking in $8 billion of revenue. Remember, it's not negative earnings that take a company down, it's debt. If their debt situation continues to get worse, all it's going to take is a loss of faith in their ability to pay back these debts to take this company down. Alright guys, this was my valuation on NIO. If you like this kind of content or you found it helpful, hit the subscribe button and then press the bell notification so that you know every time I post a new video. And if you have any topics or things that you'd like me to cover in the future, let me know. I'm always looking for new suggestions. Thanks for watching.